You made $100,000 freelancing in 2026. Congratulations. Now let us figure out exactly how much of that the government is going to take. I am going to walk through every single line of this calculation, dollar by dollar, so you know your real tax bill. Then I am going to show you how to legally shrink it. No vague advice, just the actual numbers. Let us start with the scenario. You are a single freelancer filing as a sole proprietor. You earned $100,000 in gross revenue on 1099 NEC forms. You are not married for this example, and you live in a state with no income tax to keep it clean. Everything here is federal. Step 1. Business deductions. A typical freelancer running a real business has legitimate deductions. Let us say you have a home office deduction of $3,000. Software subscriptions, tools, and equipment totaling $2,500. Internet and phone allocated to business use at $1,200. Professional development and courses at $800. Health insurance premiums at $6,000. Mileage, supplies, and other miscellaneous expenses at $1,500. That totals $15,000 in business deductions, which is realistic and conservative for someone at this income level. Your net profit on Schedule C is now $85,000. Step 2. Self-employment tax. This is the one that hurts. The IRS does not calculate self-employment tax on your full net profit. They use 92.35% of it. So 92.35% of $85,000 is $78,497.50. Your self-employment tax is 15.3% of that amount. That comes to $12,010.12. Let me round to $12,010. Remember, this covers both Social Security at 12.4% and Medicare at 2.9%. You pay both the employer and employee halves. Step 3. The above-the-line deductions. Before we calculate income tax, you get to deduct half of your self-employment tax. Half of $12,010 is $6,005. This reduces your adjusted gross income. You also get the QBI deduction, but we will calculate that in a moment. Your adjusted gross income is $85,000 minus $6,005, which equals $78,995. Step 4. Standard deduction. For a single filer in 2026, the standard deduction is $16,100. Subtract that from your AGI. $78,995 minus $16,100 equals $62,895. Step 5. Qualified business income deduction. Under the One Big Beautiful Bill Act, the QBI deduction is now permanent. You can deduct 20% of your qualified business income. Your QBI is your net profit of $85,000 minus half of SE tax, so roughly $78,995. 20% of that is $15,799. Subtract that from your taxable income. $62,895 minus $15,799 equals $47,096. That is your taxable income for federal income tax purposes. Step 6. Federal income tax. Using the 2026 brackets for a single filer. The first $11,600 is taxed at 10%, which is $1,160. The next $35,900 from $11,600 to $47,096, staying within the 12% bracket up to $47,150, is taxed at 12%, which is $4,259.52. Your total federal income tax is approximately $5,420. Step 7. The final bill. Let us add it up. Self-employment tax, $12,010. Federal income tax, $5,420. Your total federal tax bill on $100,000 of freelance income is approximately $17,430. That is an effective tax rate of 17.4% on your gross revenue, or about 20.5% on your net profit. Not 30%. I will come back to that. Now let me show you how to reduce this further with 3 strategies. Strategy 1. Retirement contributions. If you open a solo 401k, you can contribute up to $23,500 as the employee portion in 2026 if you are under 50. You can also make employer contributions of up to 25% of your net self-employment income. A $10,000 solo 401k contribution would reduce your taxable income by $10,000. At the 12% bracket, that saves you $1,200 in income tax, plus it reduces your QBI calculation slightly. The real win is you are building retirement wealth with pre-tax dollars. Strategy 2. S-Corp election. If you elected S-Corp status and paid yourself a reasonable salary of $55,000, only that salary is subject to FICA. The remaining $30,000 in distributions skips the 15.3%. That saves you roughly $4,590 in self-employment tax. Minus the extra costs of running an S-Corp, roughly $2,000 for payroll and tax prep, your net savings are still around $2,500. Strategy 3. Maximize your deductions. Many freelancers leave money on the table. Are you tracking mileage at 72.5 cents per mile for 2026? Do you have a dedicated home office? Are you deducting health insurance premiums? What about continuing education, professional memberships, and business travel? Going from $15,000 to $20,000 in legitimate deductions saves you another $500 to $750 in income tax, plus reduces your SE tax base. Let us stack all three strategies. Starting tax bill, $17,430. With a $10,000 solo 401k contribution, your income tax drops by roughly $1,200. With S-Corp election, SE tax drops by roughly $2,500 net. With $5,000 more in deductions, you save another $700 or so. Your optimized tax bill is approximately $13,000. That is a savings of over $4,000, and you have $10,000 sitting in a retirement account growing tax-deferred. Here is what I want you to take away from this. Your tax bill is not a fixed percentage. It is a series of calculations, and every calculation has levers you can pull. The freelancers who pay the least in taxes are not cheating. They are just pulling every lever available to them. If you are paying quarterly estimates, use Form 1040-ES and base it on your actual projected numbers, not a flat 30%. You will either free up cash flow or avoid an underpayment penalty. $100,000 is a milestone. Keep more of it.